When CIT Group had trouble selling its debt to the world's biggest bond investors, the commercial lender went looking for financing with individual investors, specifically retirees. Bloomberg's Carolyn Salas has been following this story. And what have you found?
Well, so basically there was a period between November 2007 and March 2008 when CIT didn't sell any bonds in the institutional corporate market. However, in that same period, they raised $827 million from individuals, retirees, widows, people like that. And basically, it looks like it's what David Hendler at Credit Sites called a pump and dump scheme in a bear market.
Really? Okay, so when we hear about internotes, what are you referring to in your story, and when or why was CIT selling these?
Well, they've been selling them since 2002. Internotes are retail notes targeted specifically to individuals. They're sold in smaller increments, which means that they end up being much less liquid, much less harder to sell on the other side, but they're not sold they're not targeted to institutions like PIMCO and BlackRock. They're targeted to individuals, and they're sold through brokers and financial advisors.
Are they predatory?
Arthur Levitt suggested that they were because they had features like there's what's called a survivor's option. So if somebody dies, they're able to sell it back to the company. So there are features that are clearly targeting elderly investors.
And it's got to be screaming regulatory investigation right now.
Well, the SEC didn't comment for our article, but the Financial Industry Regulatory Authority did tell us that they are looking into sales practices. They are responsible for regulating brokers. So they're looking at sales practices by financial advisors to individuals, whether or not the prices are being reported on time, and whether or not the prospectuses were adequate.
So then what kind of advice are you hearing from people to protect yourself as an individual investor from these internotes, or to at least educate yourself so that you don't get burned?
Right. So the response from the leading underwriter in the retail notes market is In Capital. And I spoke with Tom Ricketts, who said, you know, people shouldn't be putting as much faith in credit ratings because they are a lagging indicator. So all these bonds, when they were sold, were investment grade. Obviously, Lehman Brothers was investment grade the day it went bankruptcy. You shouldn't be relying entirely on credit ratings when you're making these purchases.
Carolyn Salas, Bloomberg News. Many thanks.
Sure.